Saurabh Mukherjea of Marcellus Investment Managers. Here are why he continues to like Tata Elxsi.
In the design of automobiles, in the design of, say, OTT platforms as front end, in the design of many of the features we see in mobile phones, Tata Elxsi is increasingly emerged as a global leader. And as auto design moves away from the Purana mode, which was once in 10 years, a Toyota gets a refresh or a Honda gets a refresh, as we move away from that into a car design refresh cycle, which is more like what Apple does with its phones, the addressable market for Tata Elxsi, we reckon, has expanded significantly. So it's a dominant player. It's the largest in India in engineering and industrial design. Firms like LTTS and Tata Elxsi, which are in our portfolio, they are more in engineering and industrial design services. This is slightly different from IT services. In IT services, TCS remains our mainstay. In some of our advisory portfolios, we have Infosys. And I think, as I've said over the last couple of years, I remain astonished that people in our country, investors in our country, buy and sell firms like TCS and Infosys on the IT cycle, because to my mind, it's a one-way story. In the case of a firm like TCS, as you can imagine, there isn't that much incremental capex required. In fact, there's negligible incremental capex required. This is not Tata Steel or an industrial giant, and therefore the entire PAT that you generate ends up becoming cash flow to shareholders, even in weak years such as possibly the year ahead. Even in weak years, you're getting 11-12% free cash flow compounding. In good years, you're getting free cash flow compounding pushing 20%.